Let's talk now about come back to sort of the comment you made before about doing your work. In other words, due diligence. So between sort of first stages of meeting the company and some interest in a term sheet to actually getting a closed deal, what at your stage of the market, what does that look like? And you mentioned you guys try to do your work up front so that when you issue a term sheet, you do intend to close on it. But what are some of the things that founders should expect to have to produce, to have to go through for a process like that to get a closed deal?
Yeah, that's a great question. And I would say, like, again, our stage is companies that have anywhere from a few $100,000 of revenue annually up to, $1 million or $2 million, up to $3 to $5 million. That's when we're doing our initial investments. And then typically we'll do multiple follow-on rounds after that. But at that kind of those stages, I would say a few things. Like, first off, we try to use founders' time as efficiently as possible because we realize that's their most valuable asset. And so we always try to move through kind of with purpose and a plan. We may meet with a company, for 30-minute catch-ups or whatever for a year or 2 years before we're really engaged. But so kind of, and we'll try to be helpful and introduce them to customers or talent kind of over that time so they can get to know us a little bit. But you kind of fast forward to when it's, to your point, like, hey, we're engaged, this is a good fit, the right stage, fundraising has started. Usually we can get from that to at least, hey, we're interested, here's a summary of terms, let us know if we're in the ballpark, we'll put in the full term sheet in anywhere from 3 to 6 weeks. And kind of through that process, it might be an initial meeting with, me or one of the partners that's leading the deal and an associate that's going to work on it. And then maybe like a follow-up. And then pretty quickly, in that time, we'll start doing some of our own market research and diligence. And usually though, for that first meeting, it's good to have a kind of a 12 to 14 slide deck that walks through, who you are, what you do, what problem you're solving, how big the market is, kind of early customers, how they're using it, and then your financial plan. We'll typically look for things like, a financial plan as well. And it's not that it has to be super complicated, but we just want to get a sense of, how's revenue grown historically? How much money have you been burning? And then try to want to be able to work on together, like, how much money do you need to get to that next stage, right? And usually that's a 24-month time period to then raise the next financing round once you've hit an inflection point. We'll look at things like your sales pipeline. We'll want to look at product demo, roadmap, dig into the technology with your technical leaders, those sorts of things. And so kind of think, a few hours of kind of meetings and things like that. We'll be doing research on our end. Late in our process, we might do a 3 to 6 hour session with our whole partnership, digging into all aspects of the business. And then at some point, we will try to introduce you to a few customer prospects, typically if you're a B2B software company, and be able to listen on all the conversations, get feedback from people that know a lot more about your end customer persona than we do. And so hopefully, worst case, if you spend time with us, you get a customer or two out of it, even if we don't invest. And best case, you get an investment and a customer or two out of it. And that allows us to get kind of industry feedback without us pre-term sheet having to talk to your customers, because we realize those relationships are super valuable. And so think that can kind of be a process done over 3 to, at most 6 weeks. And at that point, usually what we'll do is we'll, say, look, we do standard MVCA deals, to our point earlier. Here's like the 5 key terms. Is this in the ballpark before we spend money on lawyers and we make you spend money on lawyers? And when we get kind of a thumbs up, within a few days, we'll whip up a full term sheet, hopefully get that signed. And then once that term sheet's signed, we're basically in, unless, confirmatory work shows something wasn't true, which has fortunately never really happened to us. And so usually once we've signed that term sheet, we'll have the deal closed within 30 days if possible, 45 at the latest. And it's lawyers taking the term sheet and drafting them into formal docs. And then we'll usually, on a confirmatory basis, want to talk to a few of the biggest customers just to have them kind of trust but verify what we, have heard from the company. And those have, pretty much always gone well. And then we're investing. So that and I think for founders, like, when you're going to be doing this dance with us, you're probably doing it with 5 of the firms or more at the same time. And so, like, to the extent that you prepare before this, it makes it way easier, because it's hard enough to run the business and manage these conversations and produce things for ad hoc diligence requests. And so prior to even starting fundraising, like, get your 14 slides down, get your story down. You know, that's a lot easier if you already have good marketing and product marketing and messaging. And if you don't, that's an area that companies frequently underinvest in. So I would look at investing in that ahead of time. Get your financial plan down. Again, it doesn't have to be complicated. Investors just want to see a monthly plan of like who you're going to hire and how much that will cost to know how much money you actually need in this financing round, and get things like your sales pipeline exports, your product roadmap slide, things like that. Just get it all tidy before you start the heat of the conversations, so that you can kind of phase the workload out a little bit and not sort of be building the plane while you're flying it, while you're building the other plane, which is your company, the more important one, while you're flying that one.
Yep. That's really helpful. I think a lot of founders have, you know, there's sort of a mystery around if I did go down this path, what would it mean, even how would it, you know, work, and what would be required to get it done. And so I think that really helps demystify it at your stage. I think, you know, in our experience, that basic roadmap you laid out remains true of investments, even up to a later stage. A growth equity type deal doesn't look all that different from what you described either. We will come back to kind of selling the company. I know that you've been a part of some successful exits as an investor too. So we'll come back around to that, what it looks like in a bigger M&A type context as well. But that's really helpful. I think the other one that I wanted to,
actually, the one other real important thing I'd say is to go through that process is to treat it as a collaborative process, because ultimately, like a large chunk of what we're doing during that is figuring out what it's going to be like to work together, and are we going to work well together. And so I'd say that's just don't overly sell it. Treat those sessions as an opportunity for you to try working with the investor and your board member potentially for the next decade, and make sure that y'all will have a good relationship. Because that's you know, picking an investor is kind of like getting married with no divorce.
Yep.
So make sure that you use that as an opportunity to try out working with them.
That's a great comment. I'm glad you said that. It's like a lot of things in life, whether it's marriage or like finding a job that you know fits for you. There's maybe an intuition that you want to sell really hard and make it work, but in reality, you sort of need to think of it as a matchmaking exercise where you want to represent the company pretty accurately, so the investor is all in, and you want to make sure that it's the investor that you want to spend a lot of time with. That's a really good comment.